there's one thing that can destroy society, is a dramatic increase in interest rates. The Fed and the Bank of England have said that it's going to stay low for some time, but I think it's going to come very quickly, a big increase.
I was more worried about that, I think, about 12 months ago, but I think that all the signs of being lower for longer because of this simple factor. If you're a politician, you have to somehow get rid of that debt. And the only way you can do it is by having a certain amount of inflation in your system. To your point, if the inflation starts getting too high, you have to put interest rates up. And that is why, if there is one thing that central bankers are praying for, it's a sustained inflation rate of exactly 4%.
So if those interest rates start kicking up too soon, of course, and we're all in debt, then all we see is our payments having to go up in line with that as well, and that would certainly begin to strangle off any sort of potential for growth. And I think that's a real balance that we're trying to find at the moment is on that basis.
And the first increase is going to be absolutely huge, isn't it? We're starting at half. If they increase by half, we're 100% increase in interest rates. And I mean, again, it's General's question at the front here, and I know this thing changes every day, but futures are pointing at interest rates to the first move being January 2015 in this country.
Can I ask you, what evidence can you present that gives you the conviction that we are not moving towards that kind of, the kind of mistakes that were made in Europe in the 30s?
I think your point there in Europe, I think our strategists are saying that if you use austerity and you clamp down on wage rises and there's wage cuts and hospitals are shut, etc., then you snuff off growth in Europe. And it makes it more difficult for these countries to pay back their debts. I think, as Charles has said, the Americans have done something different. They've stimulated their economy, they've pushed it forward, they've printed money, and they seem to be getting it right. Where Merkel and Europe needs to cut interest rates, raise interest rates, then cut them, and it's all about they're terrified of inflation in Germany, aren't they, because of what happened historically.
There could be situations out there that consumers haven't got any money, the country is in debt, but companies are doing very, very well. So there's dangers out there across the UK and across Europe that we start seeing some sort of windfall taxes on companies.
There are companies like that all over the world. So I see the phenomena you're talking about there, and that makes complete sense. But if you look at Gazprom, the world's biggest gas supplier, they've got all of the assets under the sun, all the assets that we would find attractive, but Gazprom have just been told by the Russian government that they're to set aside $5.7 billion to pay for ski lifts because the Winter Olympics is in Russia in a couple of years' time.
I'd just like to come to a close, just thank everybody for their contribution. So join me just to thank the panel.